we're back with another episode of To Invest or Not. Remember, this show is not a recommendation to buy or sell securities, but only suggestions for further research. Let's get straight to it. So we're going to take a look at a $90 million specialty pharma company targeting highly specialized therapeutic areas of ophthalmology, neurology, and transplant. This year, Aequus Pharmaceuticals' stock price jumped more than 200% back in March. That's around the same time they rolled out the Evolve eye drops product to eye care professionals in Canada. They're on our radar because as they continue to work on building a Canadian commercial platform through their own development pipeline and through license acquisition, their annual revenue is growing. But we'll take a look at numbers in a bit though. Now, this Vancouver-based company was incorporated in 2013, and their product portfolio include their Evolve dry eye products for various symptoms involved with dry eye disease, blepharitis, and that's including discomfort, stinging, burning, and dryness. Then there's Vistatin, an ophthalmology product to reduce elevated fluid pressure of the eye in patients with open-angle glaucoma or ocular hypertension, which is when there is too much fluid that enters the eye without being drained. Also, another product being marketed right now is tacrolimus IR, immediate-release oral tablet used for the treatment and prevention of acute rejection following organ transplantation. Aequus' development stage product includes Topamate XR extended-release oral tablets for the treatment of epilepsy. There's also AQS.V used for the treatment of nausea and vomiting of pregnancy, and AQS.1304, a cannabinoid-based therapeutics for neurological disorders. So that's that, but how well have they been selling their marketed products? Well, in Q1 of this year, sales were down slightly when compared to the same period last year. Revenues decreased by 15%, and that's believed to be caused by the consumer buying patterns and COVID restrictions that are making things a bit unpredictable. But if you step back and look at it since 2016, you do see a nice growth pattern with operating income near the positive side of the chart, revenue continuing a gradual upward trend, a positive cash and cash equivalent position, and net debt somewhat being contained. Now, we would still have to wait and see how well 2021 will treat them with the year-end financials. Now, AQS went public in the Toronto Venture Exchange in 2015, initially starting out at 55 cents per share before setting an all-time high of 80 cents. A downward trend followed over the years to eventually set a floor price of 6 cents. This year, however, has given AQS buyers who stepped in when the markets opened on the first day of the year a great opportunity, because by the 1st March, they would have been up more than 200%. That's music to your ears for short-term investors and swing traders. But for long-term thought, the good thing here is you have enough price action to know around what price you want to enter a position. Obviously, the lower end, the better. Aequus is pushing pipeline products to join their commercialized ones. Generally, this translates to revenue growth in the long run if they sell well, and they are targeting various highly specialized therapeutic areas like the dry eye disease that's affecting approximately 6.3 million Canadians. We would have to wait and see how well Aequus' Evolve dry eye products can help improve the lives of these patients and capture their hearts. Then Aequus could go on and capture a large share of the DED market that's expected to see a compound annual growth rate of 6.9% for the next 5 years. Same goes with the Vistatin product and the glaucoma therapeutics market that's expected to see a compound annual growth rate of 6.1% for the next 5 years. Where do you vision AQS by then? What do you think? To invest or not? There you have it, guys and gals, millennials and madmen. Remember, these are suggestions and ideas, not financial advice, so always do your own research. Don't forget to subscribe and hit that like button, and let me know what you think in the comments section below. See you next time.